Jump up. Come on. Right, there we are. Live, still in our somewhat temporary setup, but we are fortified by Winston, which must be a good thing. He'll give us some strength and wisdom as we get through this tough time. But in all seriousness, it is, of course, a huge week, not just because of the presidential election, but about 24 other major things. And I want to make sure that you are the best informed investor going into this week or 4 weeks. And therefore, Winston will break down the wisdom for you here that's about to unfold. So what have we got? We've got support resistance lines on the big indices. What's going to happen? We've also got lots of stuff, lots of data points to go through, lots of important things that have just happened. So stick around, smash the you know what. And as I tweeted earlier, do we still say that, or do we X now? I don't know. Whatever happens today, we'll keep building wealth so that our future generations never have to work and never have to do something they don't want to do, never have to go to a job they don't want to go to, and can just be and do whatever they want to do. And I think with that in mind, literally look at this chart here. And you've got Republicans in office in red and then Democrats in blue. Does it make one bleeding difference? Actually, no. For the market, it really does not make a difference. There's no difference between a Republican or Democrat in the White House. So that's the good news, right? You can get terribly head over heels and upset about who's going to run the country, or allegedly run the country, or pretend to run the country, but the markets will be just fine. And if we focus on making money, we'll be just fine. I appreciate there are really important things out there. There is Peanut the squirrel, which is a horrible story, a horrible story. The people who do that, I mean, they really deserve to be rounded up. Not literally, obviously, but yeah, just like what happens to humanity, right? Anyway, we shall move beyond squirrels, because we've got a bunch of good reasons to be very, very optimistic and cheerful, like this guy here. And we literally have the best months coming up. November to January here are by far the best months of the market. And especially in election cycles, presidential elections. October, which is usually a pretty decent month, gets dragged into November because everyone's a bit freaked out about the election, and therefore November, December, and January tend to be very, 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 very shiny. So we're excited about that. We are equally excited about making money out of it. How do we make money out of it? By spotting those great, big, juicy breakouts. I just want to make sure you guys are with me live here. Share screen, please. Oh, sorry about that. Okay. That's why it's good to check. Right, we shall do that. Okay, let's you just have to imagine, right? It's a bit like being blind, isn't it? Okay, this was the presidential election chart, just so you see it again. The market just up almost in a straight line, tempered by the occasional crash like 2008, 2000. That here was 1929, 1930. But most of these little blips are barely noticeable, right, in the long run. So $1 invested at 1901 would be worth 96,000 now, right? Pretty extraordinary stuff. So get investing that dollar today, because your children and children's children will then have $96,000 down the road. And yeah, this was the chart for November to January, is the finest period of the year. I was watching stories about Peanut. Yeah, what is that all about? Literally, like, I mean, are there not bigger problems in this world than people keeping squirrels? I remember I was in London last time. I was in London, beginning of the summer. I walked through Kensington Gardens, beautiful park, and I got to the other side, and there's a wall, and there's a squirrel on the top of the wall, big bushy squirrel, and he had literally a nut in his mouth, and he dropped the nut onto the pavement. And as he drops that nut, he kind of looks at me in sort of panic, because he's thinking, getting down there next to traffic, it's dangerous, but I really want the nut back, right? So I took the nut and I put it back over the wall on the other side, and he picked up the nut, stopped, looked around, looked at me like he was saying thank you, and then squirreled up the nearest tree. They're lovely little creatures. They're just like mini Winstons, basically. Horrible to think that people would kill a bloody squirrel for no real reason, right? Can you at least put it in a sanctuary or something? I mean, somebody would have taken the squirrel. Anyway, money is the one thing that shelters you from most madness, to be honest. I think that's sort of my lesson. So check out the masterclass. Learn how we spot those big juicy breakouts. And somebody wrote this, I saw this in my inbox this morning saying, Chris wrote this, I did sign up to the masterclass and learned valuable lessons. Thank you. Thank you, Chris, for sharing that with us. So if you want to learn that too, the link is down below, felixfriends.org/get-free. Of course, you want to do that after this incredibly insightful video. Otherwise, you might miss Winston's real secret to what's going out on here in the market. And if you're wondering who Winston is, he is where are we? This chap here, this one here, very, very alert, as you can tell. So it's links also down below. Check it out. Now, I was a little worried about the Apple earnings, I must say, and we have a video coming out on the whole big tech earnings, sort of a summary, and I would highly recommend you watch that because it's kind of what runs the market. But then I actually saw the sheer enormity that is Apple share buybacks. $100 billion they're buying back. You know, that's more than the market cap of Intel. They could literally have just bought Intel. And it's a money-making machine. It will continue to be, people will continue to use iPhones and use more Apple services, and therefore Apple will continue to be buying back at these insane levels. And that's ultimately, Apple is it's sort of a buyback stock now. It's like a dividend stock, basically, without the tax implications. So it still looks pretty good. Now, there are more reasons to be bullish, and this chart probably deserves explanation. We have expected profit growth, sort of by Wall Street's Muppets, and then we have the realized profit growth. And generally speaking, Wall Street is a bunch of nitwits who are on antidepressants, or not enough antidepressants possibly. So say for 2023, they were expecting 0.001% earnings per share growth, and we got 4%, 8%, 7%, and so on. So there's always this gap. Wall Street tends to do better than the analysts' forecast, which is kind of weird. And so far for this quarter, well, Wall Street was expecting 3% profit growth. And so far for this quarter, we got 6%. So it's a pretty low bar and it's pretty easy to beat. And again, that makes me optimistic because that's kind of all we need. We just need to beat expectations for the market to keep going up and up and up. And remember this, in terms of seasonality, we are here right now, and that means it's very likely, at least by historical standards, that we go up a beautiful 4% by the end of the year. I just want to make sure I'm sharing my screen still. Yup. I'm still struggling with the one screen. Damn those contractors. We also have this week literally a rate cut coming. Yup. 98.1% of the market is expecting a rate cut. It's sort of like an election in Iraq under Saddam Hussein, or maybe in California. So yeah, we're going to get a rate cut. That'll be good for stocks. Tech stocks will rejoice. We do, of course, want to know, what their guidance is and so on. So the press conference is important, but the world is expecting a rate cut, and we're going to get that rate cut. We also have massive room to buy. The V is missing there quite clearly. Massive. Did you eat the V, Winston? I think Winston probably ate the V. There he is. He's pretty sleepy. He did a lovely little hike today with a bunch of old friends. Furry ones, not human ones. And we are literally at and it's a bit confusing if you're not a statistician, but we're at the 98th percentile, and excuse me for writing with a mouse, of kind of the overall fund exposure to the market, which means we have huge potential for them to buy more. And that's, of course, very, very important. Now, we're about to be joined by my chief financial analyst here, which is important. Do you have some important wisdom and insight on the market this week, Talila? She does, but she is unwilling to share unless you pay her a high fee. So that's why we put out the masterclass, because that way you get information for free. Cats, pickle creatures. Anyway, the week ahead is literally monstrously important. So Tuesday, we get ISM services PMI, which is about as important as the presidential election. I'm kidding. Of course, Thursday we get the Fed rate decision. We get Papa Powell talking. And by then we should know who's the president, probably, unless it ends up in the courts. And we get core inflation rate. We get PPI, which is producer inflation. And then we get retail sales to round up the week. So it could all be absolutely glorious, or it could all be absolutely horrid. And we'll let the data decide. But yeah, big week, big, juicy, bouncy week. So learn how to spot those breakouts. You might need it more than ever after this week. And watch my masterclass. I literally teach you on that, how you spot those monstrous breakouts before they actually materialize, because that is important. Now, let's have a couple look at Tesla's upset at Winston's retainer. Winston, a girl? No, Winston is a Winston Churchill wasn't a girl, was he? I thought he was a very manly man. So no, Winston is definitely a boy, unless he now identifies as a squirrel in sympathy with Peanut. Do you, Winston? Probably. Poor Peanut. So let me show you a couple of important things for the week. This here is tradevision.io. There's the link if you care to check it out. There's a week's trial. You can check it out. And what we have here is, let me show you one thing at a time. Support and resistance, right? We don't make these up. These are actually market maker positions. So when we hit 570, where the support is, they buy. Right? We're very close to that level though. So if you break significantly through 570, then the buying stops, the music stops, and everything is terrible. On the way up, resistance is 590, which is where market makers sell. Knowing that can be very, very, very useful. So it certainly has been useful on Thursday and Friday when you kind of knew exactly where the buck stopped and where we were going to bounce off. That's for the S&P, SPY. For QQQ, let me show you here as well. The support sits at 480, with 6 points above that. Resistance is at 500, which is held very, very nicely. So those are the levels that I would expect to hold unless we get something cataclysmic. Now, I don't think it really matters who becomes president in terms of the stock market purely. A Harris victory might give us a bit of a dip. It might, which would probably be a glorious opportunity. A Trump rally, in theory, should give us a rally, although most of the market is already in Trump positions, which means, buy the rumor, sell the news sort of type thing, right? Right now, the market is undecided, I'd say. Nvidia is up quite nicely. Everything else is down a little bit. Apple down almost a percentage point. Amazon down almost a percentage point. Tesla is down 2 points. This is just sort of market jitters, pre-election, pre-Fed rate cut, and everyone just going a bit, oh, this feels a little bit queasy. What do we do with this? So I wouldn't worry about it, honestly. I think it's going to be absolutely great. LLY is also down a little bit. Some other upstart has come up with something else that'll make you lose fat faster, apparently. I mean, they're called miracle drugs, right? What a load of hogwash. They're not miracle drugs. It's just that being really, really fat is really, really, really bad for you. And it causes arthritis and everything else that these miracle drugs now are, are curing. They're not curing it. They're just making you less fat. And therefore, the obesity isn't killing you quite as quickly. So very, very odd that people believe that these are miracle drugs. Right, let me see if you've got any questions here. Jan Cry, you're at Imperial. Okay, I walk through there a lot when I'm in London. It's my path to the park. And indeed, I did go to UCL. You are very well informed, my friend. Paul, have fun at work. What do you think about Buffett selling more Apple stock? Says Hitul there. I think it's two things. I think it's one, there is no real innovation at Apple, right? I mean, I know there's lots of little things. own chips and, you know, all that kind of stuff, and service revenue is growing and they're printing money like, you know, like water. There's a lot of good stuff there, but there isn't that sort of huge vision of, okay, they can go from 3 trillion to 9 trillion in a couple of years sort of thing. So I think that's one thing. And actually, that's probably it, really. I think that's pretty much it. I think he's just a bit cautious on it. I think he doesn't see like massive growth there. I think he's had a very nice run up and now he's collecting cash and he's hoping he can buy something better. Palantir beat or miss, Charlie? I think they're going to beat. The question is, are they going to beat massively? They have to beat. The market is expecting a beat. So they have to beat hugely to actually sustain the current share price. Why don't the support and resistance correspond to call put walls, says Fred. You're talking about trade vision here. Let me show you guys. Let me share my screen again. There it is in trade vision. So this resistance line here does correspond to what you call the call wall, but it corresponds to all the call walls of all the future dates. So we don't just factor into what happens today or this week, but all of the future, and it's a lot more accurate that way than just looking at what's happening right now. I mean, in this case, it does correlate exactly with that, but it isn't always necessarily the case that this week's market positions are exactly the same as in all the weeks going into the future. Okay, let me see. You know, you can get wisdom here from me, Winston and Tallulah. Is there a cat behind you? Yes, this is a cat. Right? She moves. She's real. Someone said to me the other day, too much AI, that dog clearly isn't real in the background. Stop using AI. I was like, okay. I don't really know what to say to that. It's on one of the videos we did outside recently. Ash free, you had a nice hike up the peak. Yep, that's brilliant, and you had a nice bite to eat. Very glad to hear that. Do we get the mails from Trade Vision fixed, says David. I believe they've made big strides. Have you checked your spam folder? If they're still not there, please do let me know and I will get it fixed for you. Are we looking at Palantir earnings today? No, I thought I'd completely ignore it. Maybe we can definitely have a look at that. And I mean, they're obviously after the market today, so we still have about 12 hours to go or something like that. Not quite that long, actually. So, of course, I'll review it when it's out. Right now, the important thing I would say is, what's the market expectation? And the market expectation is basically... Actually, am I sharing my screen? No, I'm not. There I am. The market expectation is basically, if I can draw in some lines here, let me just go over that. You see this blue box over here for this week? That's the market expectation. So the market's basically saying stock's going to be between $36 and $46 by the end of this week. So they're expecting a $5 up or down, give or take, move, which is pretty significant, right? That's 12-14% or something like that. So expect big whopping move. There is support at 42, but we're currently trading below it. So the support's sort of gone out of the window, and I think there is more downside risk than upside risk. And that doesn't mean I'm a bear on Palantir. I'm just saying we've had this tremendous rally up, which, you know, we called down here at $22. So the stock's gone up, you know, it's doubled basically. And when that happens before earnings, it just means you've got massively high expectations. So they need to not just tell us that everything is wonderful and the contracts are pouring in and everyone loves them, but and Alex Karpshaw with glorious hair, which I thought I'd emulate quite well today. Have you seen my hair today? It's rather larger than life, but they need to come in with the commercial contracts and the government contracts, like literally like massively beat. So if they don't massively beat, I think we're going to take a bit of a dip, which I might quite enjoy. So, you know, there's a silver lining to every cloud. IS, that's very kind of you to say, my friend, that you got value out of that masterclass, because that is exactly the intention. I'm just going to put that here for everybody else to see. I know you can't see it because I'm not sharing my screen. How do people work on one screen? There we go. Isn't that very nice what IS is saying that? Thank you for your insightful analysis. Watched your masterclass, learned a lot. Appreciate your sharing of your knowledge. Thank you. Thank you, IS. I love that the fact that you're willing to learn. So check it out, guys, at felixprehn.org/get-free. It's a 30-minute video that I recorded for you. You can watch it anytime. Right now is probably a good time to do that. Let me see your questions here. Carlo, I'm glad you're making money, my German friend there. Do the support resistance lines include JP Morgan's hedged quarterly positions? Yeah, they include everything that's out there in terms of positions. Love the trend line you taught, helped a lot. Okay, appreciate that, Colin. Watch the masterclass, thanks for making it, brilliant. Oral, I get what you're saying there on expectations. The market doesn't have to make a lot of sense. Why the boxes you moving? Yeah, we just moved back in here, which is why it's such a freaking, disaster. But it's all good. It's all good. Okay. Would you look to sell cash secured puts or buy order for Palantir? I think when you have earnings that are as big, let me just make sure my screen's shared here. When you have earnings with that wide a movement, $5 up or down, you can trade it, but yeah, I mean, selling options is definitely better than buying options. That's for sure. If you expect less of a move, something like this can be very profitable, but also potentially very painful. For most people, I'd say don't trade earnings like this because they're very, very volatile. Palantir is a very volatile stock anyway, so I just don't think it's worth the risk reward, to be honest with you. I would kind of just sit it out. Ben says, do companies aim to give moderately positive earnings reports so their stock doesn't tank, but does dip a bit so they can buy back in November at a cheaper price? No, I don't think that's the intention. I do think companies tend to sandbag guidance a bit. So you sort of want to keep everyone happy, but not too happy, so you have an easier job beating expectations next time around. And it's a bit of an art form, the art of sandbagging. Charlie, you're very kind. Appreciate that. We try to give value. I think sometimes we give far too much detail. People always tell me, all these YouTube consultants always message me and say, you should simplify everything. Give less detail. They can't handle it. They can't handle the truth. And I'm like, yeah, I think people can. And that's kind of the point of this. I do this as a hobby because I enjoy it. And my intention was always to show you like what it's really like if you are working in a bank or a hedge fund or something, and the things you would really look at, rather than some like dumbed down version that doesn't really give you much value. So appreciate sometimes it might be a bit much, and do slow me down and do ask me questions. But Tesla right now is trading at 243. That's below the support line at 245. I'd expect us to close above 245 again. Call me, I might be wrong on it, but that's the way I see it. Why do I see it like that? Well, the support is pretty strong for Tesla, and you see the sell-off up here. Let me show you. Okay, so we're going down, right? What else is going down? Volume is going down. Let me just check you guys. Am I sharing my screen? Yeah. Volume's also going down. So less people are selling as the stock drops, which means there are less sellers out there. So we're kind of exhausting the sellers, which in itself makes it easier to hold the stock price. So I'd venture we probably close just above 245 somewhere, which would be just fine. We can handle it. I know you can. But that's That's it. How did you like the Shangri-La in Manila? That's always very pleasant. It's very pleasant. Not my favorite hotel in the world, but it's a very pleasant hotel with very good service. Ananas says simplified means clickbait and dumber things. Yeah, and you gotta do a little bit of the clickbaity thing. It's just the way human psychology works. It's a, if you are imagine you're the front newspaper of a tabloid, a real like sort of New York Post or something, and then you put in a really boring headline in there, like no one will read that, right? And that's the same with YouTube. So you're competing against like all the cat videos. So you got to be a little bit spicy on the front end, but then the back end, I think you can do it the way you want to. Can you please explain how to do options trading without buying the stock? You don't need to own the stock at all to trade options. What I would recommend is, what would I recommend? Where do you start? We do have a free options program, like in a sort of mini one. If you go on our website, goatacademy.org, that might be a good place to check it out. Damien says, don't forget to click the like button. Thank you very much. 200 of you have found that like button. The other 700 are still stumbling around in the dark. When are you coming to the UK next? Not in the winter, my friend. Neil, as much as I like the UK, not in the winter. It's too dark. I've done far too many winters working in London, getting up in the dark, getting home in the dark, and just feeling very, very gloomy. And I thought, I need to get out of this. I need to find a way to get out of this. And luckily I have. So I'm never there in the winter. Dishlayer, you're watching the masterclass. Brilliant. Okay, I love that. I'm glad that you're watching that, and it's good that you can pause it and play it back. Anyhow, guys, any other questions, my friends? Otherwise, I'll do a quick recap of where we are at for anyone who's just tuned in. And very, very important week, basically. But don't get too hung up on the presidential elections. I know it matters. It matters a lot to a lot of people. From a money point of view, it honestly doesn't matter all that much, because look at this, red years, blue years, it's all about the same. So it doesn't really matter in the long run who's president from a stock market point of view. Why? Wall Street bribes them either way. So it really doesn't matter. They've got their wallets out. November to January coming up. The next 3 months are the best of the year over the last 70 years. So enjoy. Enjoy the free masterclass I recorded for you, which teaches you how to spot those big, beautiful, bouncy breakouts so you can make more money. And there's literally a pattern to it. There is a setup to it. There are rules to it. You just got to learn it. Someone's got to teach you. So go to felixprehn.org/get free and learn it. And as Chris here said, I did sign up to the masterclass and learned valuable lessons. Thank you. And a few of you just said the same thing in the chat here, which I appreciate. Apple, let me just skip over that. Expectations for earnings this quarter are only 3% improvement. So far, we've already done 6%, and we might do better yet. So expectations are very low, which means it's very easy to beat them. And therefore, it's very easy for the market actually to go up. And in addition, seasonality, as I mentioned, November, December should bring us about a 4% increase in the stock market, judging by historical standards. We're also getting a rate cut on, was it Wednesday? I think it's Wednesday, right? I guess they didn't want to do it. Did they always do it Wednesday, or did they usually do it Tuesday? I thought they did it Tuesday. Maybe they didn't want to do it on the presidential election day. Anyway, 98.1% of the market is expecting a rate cut. So we're getting that rate cut. And that, of course, will be good for your tech stocks and SoFi and fintech and so on. Overall, funds are massively underexposed to stocks. They can buy enormous amounts more. They're at the 98th percentile, which means they're very, very, very underexposed, which is good. So they could buy a heck of a lot more. And then just to give you maybe you want to take a screenshot of this just to show you how important this week really is. Presidential election, if you hadn't heard it, I mean, nobody mentioned that on my Twitter feed. And Fed rate cut on Thursday. Friday, consumer sentiment, not as important. And then next week we go into inflation data and PPI and so on. So big week this week with presidential and Fed decisions coming out. Go and watch the masterclass, because you'll walk away with more knowledge than you presently have, and you'll hopefully be able to make more money. And as Ayas just said here live, and I screenshot that, I hope you don't mind, my friend, says, watch the masterclass, learned a lot. And that's really what it's all about, right? This whole community, that is the purpose. As Winston is a little hot here, can you see? He's a little hot. Wish you can lay around and sleep like Winston. He's had a tough day. He's done 2 hikes today. Played with his friends, and I just played with him in the park. So he's had a very tough day. I mean, he deserves some sleep, really, this guy. Rad says, I've seen Felix's Trading Challenge live stream masterclass. They both have actual real lessons and content. Totally worth your time. Well, what's with the kindness and generosity overwhelmingness today here? We don't usually do that, do we, on this channel? It's very kind of you to say, and I shall screenshot that, because sometimes it's nice to have something positive to look at. I must say, no, our comments are 99% positive. It's just sometimes the 1% do irritate you. Jing-a-ling-a-ling, love the VIX. It's a big button. What happened to Tesla 300? Yeah, it's just a little bit of a pullback. I think it's a bit of an election kind of, we're 243 here. I think we'll close above 245, because that's where the support line sits. Winston's got to get up, and he reminds me I should change the screen here. Where's he going? Where is he going? Is he going up? Is he going down? What's he up to? Winston, which way are you choosing? Path to food, I would imagine. Let me show you Tesla here instead. If you go on a minute chart, and the market's literally just open, so there's really a lot to go at yet. Support's at 245, so I would imagine we keep getting dragged to 245. Like, see that here, the first 2 minutes of the day, we got dragged to 245 each minute. So let's wait for the next minute and see if the same thing happens again. This could be exciting, couldn't it? And let me see your questions in the meantime. Boo Boo says Pikachu. That's a nice screen name. You said everyone should watch it. I really appreciate you guys. That's really nice of you today. I shall screenshot this to show people that what I do isn't a complete waste of effort. I know it isn't. We reach a lot of people, and that's what makes it fun here. So we're at 243 right now. We'd like to see another minute. Ooh, we're dropping to 242. Uh-oh. But no, I would expect market makers to buy fairly significantly and close this about 245. I could be wrong. People could really freak out. If they freak out in a significant volume, then of course you can close below these break support levels. But that's what we have. Yeah, we're really dumping here a little bit. What about NVDA? That was the one thing that was up pre-market. This is a minute chart. So 137, that's kind of okay, right? We've kind of been limping around the 135 mark for quite a while. So nothing scary going on over there. Let me see if I missed any questions. YouTube's telling me I should be inserting ads. We shall most certainly not do such a thing. So yeah, let me leave you with some insight here from tradevision.io. Support is at 570 for the S&P. That's market maker positions. For QQQ, it's 480. So looking a little bit more safer on the Qs than on the S&P. We're pretty close to that level. You don't want to close significantly below 570 because bad stuff happens there. And get yourself a week's trial to Trade Vision. Links down below in the description, and you'll be smarter and better informed and everything else. And Tallulah, any final wisdom? Any final pieces of wisdom? from you? Anything you want to think about? Basically, chill out with the election, guys. The world will continue. I know it seems like a huge thing for a lot of people, but from a market point of view, at least, it doesn't matter very much. Though if you ask Peanut the squirrel, those New York people, they should really be fired, shouldn't they? I'll just be like, yeah, they should be fired. I just don't think that level of inhumanity or in squirrelness belongs anywhere. So bastards, go get them. And trade this week or next week. The market's actually very calm on the election outcome, which is kind of surprising. So if you look at, let me show you here. I'll share my screen with you. If you look in Trade Vision, see this blue box here? That's the expected move for the S&P. So if you let me just put in these blue lines. That's the high end, and this is the low end. So we're expecting a bit of volatility, but like not crazy levels, right? That's 14 points up, 13 points down. So the market's taking this election kind of as a, we don't really care that much. So yeah, it's less movement than a big inflation number or a Fed decision or something. So I don't think Wall Street's that worried about it, to be honest with you. In theory, a Trump presidency should be more pro-Wall Street, right? Whether you like that or not, different story. But either way, we'll be making money, which is ultimately what this is all about. So make sure you have your pause on that data at tradevision.io, links down below, so you're good and well informed, even when I'm not here and when Winston is snoozing, as he is down there. And I thank you genuinely for tuning in. Go watch the masterclass at felixprehn.org/get-free, like so many of you already have, which is absolutely brilliant. And I wish you a beautiful day. And if you are in the US, go and vote, because you can, and therefore you should. All the best.